Hi, everybody. Scott Riley, the Market Update Desk, January 15th. It is a beautiful day in the market. Yesterday, we had wholesale inflation come in better than expected, give us a small betterment in the bond market. Today, we got the counterpart, consumer inflation, CPI. And wow, has that really helped us in the bond market and mortgage-backed securities, which is great news for mortgage rates. Let's kind of go through the data and categories here. So headline CPI came in month over month, up 0.4%. In fact, actually, the non-rounded number was 0.39. So year over year, we did increase from 2.7 to 2.9. Technically, the non-rounded number is 2.89, but everything gets rounded up for media purposes. Now, those were in line with market expectations, so not huge difference there. But what we got in the core, which the Fed does favor the core reading versus headline because it does strip out volatile food and energy. Core reading came in plus 0.2, which the market was factoring in a 0.4 increase. That was quite a bit difference. So that brought our year over year actually down. We were expecting the year over year to increase. So we went from 3.3% to 3.2%. And wow, did the bond market rally on that. In fact, I've been able to say this for a long time. Mortgage-backed securities up 57 basis points. 10-year treasury down 12 to 4.655. That's a huge movement within the day. That's great news. On the headline category side, let's look at where that inflation came from. Energy, gasoline, oil, natural gas, that was up 2.6%. Food up 0.3%. Shelter, this was the area that we were hoping we would get a little bit of help from, and did we? So shelter was up 0.26%. Year over year, up 4.6%. That's down now from the previous month. So that's great news. We're maybe seeing that lag effect we've been talking about for so many months now start to trickle in and give us some benefit in these very critical areas. So as you can see, most of the inflation, 2.6% of the entire thing, energy up 2.6%, that was the lion's share of the increase. We had been concerned about that with this increase in WT crude oil, Brent crude oil. Both those do have some concern as we go even into the next couple months. So if we take out the energy, the food, and the shelter, everything else was only up 0.08%. So that's some good news. Now, when we get to the core side, on the category side, shelter was up 0.26%, down 0.1 year over year. In the subcategories, rent was up 0.31% year over year. That's down 0.1. Owner's equivalent rent. It's always a volatile one because it's imputed. They call homeowners and ask what would they rent the house for. Most don't really understand the market on what it's really worth or not worth. That was up 0.3. So year over year, we're down 0.1 on owner's equivalent rent. The big one, this is even a bigger volatile one, lodging away from home. While it doesn't have as much category weight, it was down 0.95%, almost a full percent. And that was year over year down 1.1%. That's where a lot of our benefit came from within core. Used cars in core was up 1.21%. Airline fares, this has been a volatile one, up 3.9%. Car insurance, this has been really a tough one for the last 12, 14 months. It's calming down. It's getting muted. It was up 0.4. In fact, year over year, it's up 12%. You know, in the summer last year, we were looking at an annualized increase of 25%. So that's come down dramatically. So when we take out used cars, airline fares, car insurance, everything else was only up 0.2. These are great numbers. So the Fed likes to look at run rates. So when we look at the last 6 months of core inflation, it's up 3.1%. The last 3 months, up 3.3%. So it's actually been an uptick in the shorter term. But that 3-month run rate actually fell from 3.6 to 3.3%. That is a good sign, and hopefully that is some positive things to follow. Now, we are starting to see on the technical side the start of potentially a positive stochastic crossover. What that means is historically, when a positive stochastic crossover happens, we start to get better in mortgage-backed securities, and the price of bonds go down. Both those things lead to better mortgage rates. So maybe we're getting a little bit of relief on the horizon. That's a little bit of a surprise and positive news for us in the mortgage world. Tomorrow we get retail sales. If it comes in at numbers or even just slightly below, we're going to keep this momentum moving forward. The great news is later in the month we get PCE, and these numbers, a lot of the numbers from consumer and wholesale inflation get put into PCE. And if those came in at or better than expected, there's a potential for better than expected PCE, which would be very good for the market. And then a couple of days after the PCE report, we get the jobs report for February, which most likely is going to have negative revisions to January. So it's a little bit of positive today. So this is some good news. I got a big smile on my face. Hope you like this. Like, share, comment if you could, please. I'd greatly appreciate it. The Market Update Desk, your original singular news source for West Michigan. 616-293-2189. Have a great day.